Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about why I believe that Bitcoin is about to go through a major rally. Now, if you saw yesterday's video, you will know that we said the exact same thing yesterday, and overnight, Bitcoin did rally up to 105,000. But it's interesting. It seems that Bitcoin has fallen over. We dropped down to about 101, leading into what is likely going to be the reopening of the United States federal government here in just a few hours. I personally believe that you're about to see a rally, and today we're going to be looking at the 5, 15-minute chart and the hourly chart. I'm going to explain why I re-entered into our long position and why I think that Bitcoin is about to have a major rally. Now, it could be wrong, but I got my money where my mouth is. I'm going to show you in this video, so without much further ado, let's go ahead and dive right on into it. This is the 1 hourly chart for Bitcoin, and you can see that there is a lot going on here. So we're going to kind of clean this up by going to a new chart. We're going to have to go ahead and delete everything, of course. But I want to show you what I had drawn over here. I want you to understand all of this. We're going to start from scratch and go over all of it. All right, so the first thing that we need to look at here is the fact that Bitcoin had witnessed a classical 1, 2, 3, 4, 5 Elliott wave formation. Now, this is not a perfect 1, 2, 3, 4, 5 because 5 and 3 are at the exact same level, but technically it doesn't break any rules. It kind of squeezes by the skin of its teeth, and it seems to work. What we were looking at yesterday was the subsequent A, B, C movement to the upside, and then we were looking for the correction down here to rally even higher. And that obviously is something that didn't exactly come to pass because Bitcoin did rally, but it actually stopped out at a very incidental level, which was the 0.618 Fibonacci. As you can see here, Bitcoin rallied to exactly the 0.618 Fibonacci and immediately fell over in a massive cascade event. This is probably because a lot of people like myself saw that this was a classic 3-5A setup, and then the market makers wanted to hunt the liquidity, which they ended up getting our stop loss. That's okay. We went ahead and re-entered because the technicals are very strong, as I'm about to show you once again. It's okay if you get stopped out and you have to re-enter the trade. It happens. That is a part of trading. You have to remember when you are operating a trading portfolio based on standardized risk, which means you are risking one R, so that might be $10, that might be $100, that might be $50, whatever your standardized risk is. That is the price that you pay to get into the market. Sometimes you're going to make more than that. Sometimes you're going to lose all of that. But that's what ends up happening is you have to pay that price to get into the trade. I think something very interesting is happening here. I think instead of this being an A, B, C movement to the upside, I think what we're actually seeing is that this was a 1, 2, 3, 4, 5 impulse wave to the upside that looks like this, which would make this correction right here, the ABC correction off of the highs. Incidentally, as you know, the B wave typically retraces back down to the 0.618, and that's part of the reason why I think this is a B wave, which makes this an ABC, which makes all of this a 1, 2, 3, 4, 5 ABC. Elliott impulse wave structure. We saw the exact same thing happen over here on this wave. Bitcoin rallied here, dropped right back down to the 0.5, right? So the Fibonacci's are coming in very much to be very, very important at this point in time. And so if you notice that we rallied up here to the 0.618, then what would you do? Well, you could draw, for example, a trend-based Fibonacci extension. And what you will find is that that trend-based Fibonacci extension is pointing basically right at 100,000. Bitcoin ended up coming down here and sweeping these lows. We placed our stop loss at 101.2 for a long time here. We just barely didn't get stopped out. Market dipped below our stop loss for just a few minutes. We pretty much immediately went right back into the trade because that lower entry is going to allow us to drive our stop loss all the way down towards $100,000 while still maintaining strong structure. And so what I am looking at right now is a very simple return on Bitcoin right back up again to the 0.618. I think that Bitcoin is going to attempt on this C wave to rally back up to this 0.618 right here. And then that could very well establish a 1, 2, 3, 4, 5 structure down to the downside. Actually, not really. I take that back. That wouldn't work because 4 would be higher than 1. So that wouldn't be the case at all. Actually, this would probably be the start of a new 1, 2, 3, 4, 5. So what I've done is I've gone into a trade down here on the 1-minute chart. Actually, it looks better on the 5-minute chart. And it shows up a little bit something like this. What I am expecting Bitcoin to do from this massive cascade right here is that Bitcoin probably left a large number of sell orders behind. The large number of sell orders that are probably going to get filled. You can see that Bitcoin is establishing an inverse head and shoulders pattern right here around the 0.236. You can also see that Bitcoin has a descending level of support right here, along with an ascending level of support here on the RSI. That shows up on the 5-minute, it shows up on the 15-minute, it shows up on the 30-minute, and I think it might even show up on the hourly chart. Shows up on the hourly chart, except not down here, but down here, right? So there's a lot of very strong bullish RSI divergences going on. On the 30-minute chart, you're about to see a bullish MACD cross. 15-minute, you're seeing one, etc. And so what you've seen happen is that Bitcoin has broken above this downtrend. We've had our overside underside test. We're currently attempting a rally, and so our trade setup looks a little bit something like this. We took a long position right in this area. We placed our stop loss right here. We placed our exit up here, give or take, and we have give or take a 4.5 risk to reward ratio. So we're risking our 1x, our 1R standardized risk. So again, depending on how confident you are, remember, more money does not make you a better trader. You're going to set your standard risk to $10, $50, $100, $5, $1, $1,000, whatever it may be. And so for us, if you've got, let's just say $1,000 standard risk, if we're risking $1,000 and there's a 4.5x risk to reward ratio, then that means we are putting $1,000 on the line for the possibility of being able to make $4,500. And that's why we're going into a trade like this, because this is a very high probability zone that you're about to see a rally. On top of that, we actually have confirmation from Speaker Johnson, House Speaker Johnson, that we are going to be seeing the vote go through to reopen the United States federal government tonight. Now, obviously, the vote has not occurred, but it is pretty typical for Congress to be able to tell whether or not a vote is going to pass, because a lot of people kind of signal what their vote is going to be before they actually go and cast their vote. At 7 p.m. tonight, which is in approximately 2 hours and 20 minutes from when I'm recording this. It is currently 4:39 p.m. This video will be going out immediately after it is recorded to the public. In approximately 2 hours, 20 minutes, probably about 2 hours after this video goes out, I expect it'll be out around 5, we're going to see that vote to reopen the government. And in that case, I expect that Bitcoin is going to start laddering up here. Now, I am going into this trading session today and yesterday having had this loss because we were actually up 70%. And because I had just woken up, I didn't have a chance to actually come in here and raise the stop loss, which sucks. So we actually went to full stop loss. So that was a mistake of mine. I should have raised that stop loss earlier on. So I want to make up for that. So I'm going to be a little bit more conservative here. And if I go 4.5x, 4.5R, I'm going to go ahead and take that trade. So I'm happy with Bitcoin rallying just to 103.5 on this 0.618. If it seems like it's having a lot of strength, then what I might do is I might come up here and start laddering up that stop loss and then just letting the trade run. Because it's really important to let winning trades run. If Bitcoin just starts taking off like a bat out of hell when we see that vote come through, then I'm going to want to let that trade run. So that's how I'm going to be playing that tonight as I watch the market. In fact, there's a good chance that I'm going to be live on air because we had to take off for a doctor's appointment today. I do expect that I'll probably be live right around then. So we'll probably be going over that together. If you haven't already, make sure to subscribe to the channel so we can watch this trade together as we are trading the reopening of the United States federal government. If the government doesn't open, then I anticipate that we'll be fully stopped out. That's okay. Once again, we put up that risk as our risk to enter into the trade. This is what we are risking for the possibility of this reward. If we go into high win rate, high probability trades, and we are risking 1 to gain 4.5, then when you do that kind of trading over enough time, if your win rate is high enough, doesn't even have to be above 50%, it's a common misconception, even if it's 45, 40%, 35% sometimes, and your risk to reward is 3 to 1, 4 to 1, 5 to 1, you're going to end up becoming a consistently profitable trader. Right now, I've just explained to you why I believe that this is a high probability trade setup, but I would love to hear your opinions in the comment section down below. One thing I'm not too happy about is that I have to put that stop loss pretty tight in here, but I've managed to put it right here below this little drop. So if we fall below here, that probably is an invalidation. So actually, it doesn't, I don't like how tight it is, but it is overall a pretty solid entry. So excited to go over that with you guys on stream. If you guys haven't already, I highly encourage you to sign up for Femex. And the reason I want you to sign up for Femex is not just because they're another exchange, but because I'm going to give you something. I'm working on a trading course right now with Femex to go over how to actually do these kind of trades, how to find these setups that I am working with. And so when you sign up for Femex and deposit $100, you're going to be getting access to that trading course for free when it comes out. Now, like I said, we've had some crazy health stuff going on. My wife is recovering from COVID right now, so trying to help her with that. But I'm working on this course. I believe it's going to be out very soon. And when it comes out, it's going to be very helpful to help you Find these setups so that you are able to actually build profitable trades out in the Bitcoin and cryptocurrency space. So if you haven't already, make sure to sign up for Femex with the link in the description box down below. Deposit $100 and start trading over there, and you will get access to that free Bitcoin and cryptocurrency trading course when it comes out. That's my trade. I'd love to hear your thoughts on it in the comment section down below. Confluences are very simple. Government's about to reopen. We have basically confirmation of that. We have a bullish RSI divergences. We have an overside underside test. We are targeting the 0.618, which we have a local example of that happening, which happened this morning. Overall, it is, in my opinion, a very high probability setup. If it prints, it does. If it doesn't, it doesn't. That's okay. But we know that if we run these kind of trades over enough time, that we're going to make money. We know that this is a statistical, an extremely high statistical likelihood that we'll end up being profitable if we do this for enough trades. So, love for you to subscribe to the channel. Stay tuned for more content. I love doing trading content with you. So that was my 30x long. That's where I went in. That's why I did it. If you'd like to see more content like this, like I said, subscribe to the channel. I love you guys. And before I go, I do just first want to thank each and every single last one of you for watching, as always. And I will see you guys in the next video. Peace.